Okay, everybody, thanks for our next installment. This is our Think 2026 session. And what we really want to be focused on is kind of an update from our original kind of strategy session, which was way back in January. And I'm going to highlight a couple of those markets and think comments that we made. And that recording is available on our gold members page, and it's available on the YouTube channel. So again, review that. That's specifically from January. That's from here. The link I'll update on the gold members page, but it's there on Harmonic Trader YouTube. Now, before I get into anything really deep here, harmonic wise, I really want to kind of just emphasize the fact that everything we're doing, everything that we're going to be talking about are going to be based on levels, triggers, and pattern framework. And I know there's a lot of talk out there. There's a lot of people are, the narrative is probably as hot and heavy as it's been. And I think it's just a point where we pretty much need to turn off what's being said and focus on what's being measured. And this is, I've gone through a whole bunch of things. So just get used to seeing a lot of stuff like this. And I want to just play this for 15 seconds. All right. You're going to hear a lot of people like this say stuff like this.
Currently investing in the most overvalued stock market in U.S. history? You might be. This is a chart of the Shiller PE ratio for the S&P 500, which is a very common valuation metric for stock.
All right, you're going to hear a lot of stuff like this, guys. And I've seen this before, and it really, whether it's relevant or not, doesn't matter. And this is something that you're going to hear over the next 2-3 years a whole bunch. I mean, here's another, and fear sells, and you're going to see a lot of stuff like this. Okay, is the stock market overvalued? Should you worry? All of that kind of stuff. If you're not measuring, okay, it's going to be a lot of clickbait stuff like this that's basically going to distract us from what we're really doing. And let me be clear, all right? Yes, the market's overvalued, but it doesn't matter. The market, let me repeat, is overvalued, but it doesn't matter. What is going on, right, is something that the narrative and whatever you want to look at it. I'm going to show a couple of charts here, things that people will be citing and telling you of why the market is to be avoided, why the market will be going down any minute. And people will throw out a lot of great charts. They're going to throw out charts like this. They're going to say, okay, debt to GDP, federal surplus or deficit as a percentage of gross domestic product. And they're going to say these are all at all-time levels. Here's the other one. Here's debt to GDP. Okay, and it's no doubt, these metrics are at historic levels. There you go. That's debt to GDP. That's something where a lot of people are talking about it. We're at 120%. Other countries are even higher. Yes, these are all-time historic levels. Okay, no doubt. These are going to be the fundamental things you guys are going to hear from people that are going to tell you that the market is overvalued. What is the problem? The market can continue to go higher, all right, as long as it wants in this run. And I from experience, and I've said this before, that I look at this situation currently similar to what we saw in the 90s. And you have a lot of just a lot of stats being thrown out, like the end is near. It's already run too far, too fast. So avoid the market. And I'm going to be of the opposite take on that. And I'll just show you one other one here. what's that? Surplus or deficit of the government budget since 2000. So here we go. And this is a great chart. And so I want you guys to understand that um, nothing really changes after the Trump budget. Okay. And then what they're projecting here, what they're trying to lay out for the next 3 years, okay, is going to look like this, where the deficit of the budget for the government, which is essentially what's driving all of this, meaning the government is spending more than it takes in, to the tune of about 1.5 trillion on average. Down here, COVID, it was 3 trillion. There's another 278. There's another 138. That's how we've tacked on almost doubled the total debt in the last 7 years. All right. And this is not going to change. So what happens here, you got to understand. All right. The debt spending continues. So the next 4 years, okay, we're going to literally add without paying anything off. We're adding another 6 trillion, minimum 7 trillion, which gets us up to about 44 trillion. And that does not even include extras, unforeseen things, meaning that the government's not going to stop borrowing money. And so the whole deal is that the real issue of inflated markets, asset prices because of monetary policy has not changed at all. And it's going to persist. Okay, that's number one. So number one, the same policies that are driving this dollar debasement, driving asset prices, if it's gold, if it's Bitcoin, if it's stocks, equity prices, this will not plan to change anytime soon. And I'm talking the next 2, 3 years, 4 years. Okay, we're going to be stuck in this range where it continues. And it's very similar to kind of what we saw back here 2013, 2014. All right, all printed, and it printed growth. They cannot let this go any further. They need to stimulate growth. They're trying to balance these numbers. They're not even trying to pay off the debt. They're trying to just balance debt to GDP, reduce that, or even better, overall deficit spending. So take that to heart. That's like the macro consideration. I've also talked about the fact that, listen, global population growth, it continues to grow. I know people are talking about, a population bubble or bust or whatever. Listen, the world population is growing generally like 0.8%, 0.8% every year. There will be more people next year than this year. Much more people in 10 years. And these are all your fundamental things that, all right, why would the markets, why would economies continue to grow? More people participating in it, more people on the planet consuming, all right, and then a primary government that's absolutely out of control. Now, when we were talking about the markets, let's just get some perspective. We were here, folks. We were right there. Hold on. 1 second. There you go. Let me bring this back. There you go. Hold on, guys. Let me keep you muted. Thank you. So this is where we were. Okay, this is where we were when we had our first session, January 3rd. And now, so again, what I'm really trying to lay down are some baseline understanding of what we've talked about, projecting it now 9 months ahead, literally 9 months to the day. of what we saw, what we're looking for, and how it played out. So that's Nasdaq. Let me show you S&P because that was probably the biggest pattern at the time that we were talking about this whole deal, especially like the monthly chart. There you go. So this was our major setup. You go back 9 months ago, we were here, literally right there. No, here. So really quick, I'm going to play a brief clip as well and just show you guys, again, give you the reference of what we were saying back then. All of this relates to what we're going to be talking about going forward. So here you go.
We're almost there. 5732 is a big number, and I'm still waiting on that. Even though we're up today like 30, I'm still waiting for this type 1. And some of the signals that we talked about, clear. I mean, this is up to you guys. I can help with featuring opportunities, but we're looking for stuff like dots and HSI, bullish within this uptrend. We're currently bearish. I've been talking about this for like 2 weeks. 60.92, come down. Why? Because this is where the return happens. So we get down here, we could get down as low as target 2. I don't expect us to be under 55. If we get under 55, not for very long. Daily pattern.
Okay, that's it. So you guys see, and a lot of you were here, most of you guys have been with me the whole year. All right. What happened? As we know, what happened here? We had daily and weekly stuff. Regardless, we're looking for that move down to like 57, 5,500. What did we get? We got to 48. We were looking for something like this. All right. More importantly, though, it's the return move that set it up. And we had it on the daily, we had it on the weekly, and again, these are going to be kind of how we position patterns like this within the long-term uptrend for the next wave. But there you go. That was the type 1. It worked out perfectly. Our whole premise was that we would do a type 1 retracement within this longer term trend. We would start up again and then blow through on the retest. This week, we're trying to put in a yellow dot. That's the first confirmation we've seen. I talked about this recently, and again, let's just let that finish this week. It's not even official until Friday. But that might be a pause point here. The larger kind of takeaway of what has happened since January has been exactly the type 1. Come on back for the 2. Some of the things we talked about in that January session of looking for signs or even going back and looking for opportunities after the failure. So I got to say that we're now at that point where if we did the 1 reaction and we're up here for the type 2 and we're going to bypass, there's some things that have to happen now. If we're going to get any dot or any kind of confirmation here, they should be treated as like a simple pause. All right. I'm not really looking for any kind of a major pullback until we hit much higher targets. And the other kind of way that we were looking at this, again, back in June, we did that session on what we can expect once we fail. You know, the basic 1618, 1902, that worked out quite well. You know, there's 1902 is like there. And real nice pause, retracement. And now, if we're doing harmonic scale, it's like this. Like the next objective, that morphing behavior, and I've said this all along, is like 7K on S&P 500. It's a 2618. All right, that's what we're targeting off of the pattern. It's a massive pattern. Okay, looking for this to continue higher and bypass the zone. Have we seen it before? Yeah. And this is where looking at past history, looking, using the software for opportunities, but as an educational tool is going to greatly enhance your comprehension of how to look at this. And I'm going to come back to this same situation where we were back in 14, 15. Okay. This one did not have a type 2, had a type 1, but a lot of the similar setups that we're seeing currently of, okay, beautiful pattern, confirmations here, it zero reaction, dud reaction, dud reaction. Even this shark can be considered a dud reaction, but I'm going to kind of highlight why this was so critical. It was more critical because of what happened at the dot level than even the pattern. The pattern certainly helps, but this is the behavior of where we are currently, guys. If I'm going to make an analysis, an analogous comparison, all right, this is not a type 2. It's only a type 1. But if we're there, I'm going to say we're probably like the current equivalent is here, or maybe even here. Still going to bang up against this resistance where we eventually fail. The bigger move that we're looking for is going to be similar to what happened here 2015, 16. Again, I'm thinking we're closer to the breakout stage of more like 16, 17. And it is uncanny how decennial years rhyme in ways where it's a very similar situation. But this is what you're looking for. All right. And we're looking for that same kind of morphing breakout behavior where it's like this. We have this consolidation, and then once we clear it, I mean, really clear it, it's an acceleration move. There's just so many similarities here to what's currently going on, and you just go back 10 years. I would say it's like this as measured off of the pattern. We could do all-time high to low, or you could do it like this, even just right off of the pattern to morph into a 2618. And this is also why the patterns, no matter where they form, are the reliable kind of projection metrics. What's that? There's 2618, well above it, and then I would say 3618. Those are the two in between levels for the extreme ranges. And look what happened. And there's a lot of similarities going on to the current situation. All right. We're not at yes, we're at the top end of a pattern and we have confirmation, but what we're looking for is it to fail because we've taken a lot of time, we've exceeded a lot of the minimum levels, and we're looking for this kind of a segment into 2026 and even into 2027. It's like that. Even 2028. I mean, if this is where we are currently, you're at 2000 right now, and so the equivalent is like 6400 here where you are right now. 2000 to 3000. Okay, nice 30% gain in 18 months or so. 30% gain on where we currently are. And that's essentially what we're looking for next 18 months. Think about it. All of next year, like this time next year into 2027, 2028, a 30% move after we clear, we're just printing this dot. So that's, again, another sideways pause, but I'm not too concerned about it. What I'm looking for is this thing go sideways up here, hold its head. I don't think we see under 6K again, and then break out after this week, literally. And if that's in 3-5 weeks, if that's at some point after a 3-5 week pause, so be it. I'm really focused on above 6,500, and our minimum objectives again are still 2618 is 7K. 3618, guys, is up there at like 8K. And that I've been saying that since it's 8,300. I've been saying that for a long time. And I do think that that's where we go, but I'll take the first part, the 2618 first, which is just focus on 7K. So this is where those are the longer term projections. So how do we get there? How do we just buy it right here and then hope to catch it in a failure move? I'm going to say we can be a little more strategic than that. All right. The daily time frames, ever since that washout, not giving us a heck of a lot in terms of where to jump on next. Like the only bullish HSI there, right there, okay, wasn't, it was just this a big kind of crash capitulation. No dot. Okay, we had we had weekly targets down here. That was it. I mean, that was really the time frame. Now we're dot to dot. So what I'm looking for is this dot for now, 3 to 5 weeks. Okay, let's just consolidate it. Again, 6,500 is a massive number. And what you're really looking for next week, if we're going to fail immediately, guys, let me show you what it'll be like. We will set the dot this week and then we'll blow it out, or set the dot like there and, blow through 3 to 5. Dot there, blow through. I mean, this dot's related to there. But what happens when you bypass it is, and this is literally next week, we're going to watch for this. Okay. Looking for a big week after we finish this week. And again, it's not official until Friday. If we're going to really blow through now, and I mean like now as in September, and then we make all the progress before October, it starts next week. Literally after that signal. To fail, if it's super strong, it will bypass. I think it's going to pause because that's typically what you see. Here's a couple of other kind of go back to 2020 similarities here, guys. And so for with all the narrative and everything going on, I just want to show you how this stuff repeats over and over again, where you're looking for like a 1618. Where's that? It's like right there. There's confirmation up there. Okay, here's a dot. This is going back after the COVID correction. First dot. It forms it, it retests it, sideways grind to go higher. That's exactly the character of the current market that we should be looking at for that to go higher. And look, 1618 and then up to the 1902, which is like right there. That was just 2020. Nice little, oh yeah, this was the other thing. You came up here, pretty ideal 382 correction continuation. Hold on. It's like this. Hold on. B and then the C here. 50% like that. All right, but bigger takeaway, dot to dot or dot to HSI. And that's going to be the same path. So where we are right now, all right, let's hit this. Again, this is the first week that we've seen the dot, so we're still early. But just look at how this thing has progressed the whole time. Everything we talked about back in January, The only thing that didn't happen was the larger breakdown move. Uh, no, was the larger breakdown move beyond our daily target one. But this is, you guys know how much I've talked about why that's critical. The fact that you did the type one and then you've blown through and you're continuing. That helps the whole failure argument, but all depends on post dot next week. Let's see. Let's see how that shapes up. Ideally, all right, at a minimum, I want to focus on the go here 4-hour time frame, and this is where we're at. Not getting a lot of. It's interesting that you get a lot of bearish dots. Look at this. Okay, so just want to come back to the daily chart. A lot of times when you're looking at the dots, I know a lot of people get amped up and think it's an end all be all signal. No, it's a starting point. But how many of these bearish dots have we had? 1 and 2 and 3 on the way up. Last move up to the prior high. Bearish dot, bearish dot, bearish dot. Took 4 dots before you had some rollover. The difference here, right? The difference here versus something like you go back here is where amplified is on the 50 level. No breakdown. And we look at this the same way with futures. On a 5-minute, we're going to look the same way as like a daily or weekly. That we get the dot first, like that, line up the dot first, and then look at amplified. Where does it crack the 50? Where the first time we could start to think maybe it's breaking down, it was like there. The dot was here. Okay, where's the breakdown? That's only a daily chart. Under the 50. That's a great filter. And so you don't even consider that until it starts cracking down. And I would say the same thing here. Look, where are we now? This 50 line, how are we going to know the trend's continuing or not? How are we going to know? It's going to be really clear at this 50 line for amplified specifically. And amazing that shakeout in August almost got you oversold. Price didn't move. These are all the signs we're going to look for based on the software to know, hey, is this done for now? Or are we going to continue? Again, that's being able to read that, being able to kind of interpret, or is this a pause or this is something bigger, is going to go a long way to really helping us understand how high this is going. I mean, I think that's a pause right now. I'm not really too concerned about, I'm hoping, as you guys should be, hoping that we get more of a pullback. I don't think we're going to. I think this is going to be kind of just one of those sideways pause drifting time frames where we push higher. When we get the corrections, we had a recent correction back to 23. We were 23K recently, but that's it. Not much other than that. So currently we're 64.50. What's the target here on S&P 500 is 7K. How do we get there? All right, just follow the weekly and look for specific things to happen. All right, like I said, this week, now I'm glad we did this. We're doing this Wednesday because we do have that full dot. Has to be something like this. Look for it, dot this week, and then a big candle next week. Also, look, you're not even at the 50 level. This is a weekly chart. And remember what I was saying the whole time. Until amplified rolls under the 50 and is breaking down, same deal with HSI, you don't have anything really other than an early signal. And it's going to be, I really think it's going to be, you're going to hear a lot of the overvalued, the market's overvalued as it keeps going up. And you're going to hear those stories. People are going to cite PE ratio, debt to GDP, all of that. It's just not going to matter because what's happening is you're in the middle of an extreme move where every little pause or every bearish signal, even on these weekly, will be a pause, and that's about it. Beyond that, we're just waiting. So we're not anywhere at the moment to take action in terms of jumping on the bullish continuation S&P, but we are looking for this to resolve itself, like I said, in the next month, maybe typical little pullback in October for us to get to 7K. And so that's like 10% from current levels. Like buy it today, you would go through some drawdown. It's just not a big deal. Either way, I would be more inclined to just simply wait. Yesterday's low at on Nasdaq at 23.3, now up 500. We're at highs of the day right now. Nasdaq's going higher, but we're looking for off of this pattern again, 2618, and right there that's 68, 6900 off of the crab, and this is the zone that we're targeting. There up to 3618. Of course, let me just 314 is a critical number in between. That's like 75. But I think you guys get the picture. 7K now, over 8K at some point next year. Could be 12 months from now, but 8,000 is what we're targeting. 8,100. It all depends on where we find ourselves. I think we could surge into the last 3 months of the year, October, November, December, and then kind of do an overspill move where you go to easy 7K or a little bit higher. I mean, by January at the 314, maybe 74, 75 if it's really super hot. And you have big breakouts. I mean, that's S&P 500, guys. Nasdaq, and I stick to it. 7,000 by Christmas. And then here's Nasdaq, and we got to actually, this has to be adjusted for contracts because this is the weekly pattern we talked about back in January. That's where we're talking about it right there. It was right there. And we were looking for a type 1. It did the weekly type 1. Now we're back. Last week, Friday, we completed the dot. So what should happen, like we saw with the other examples, if this is going to blow through here, this has to be a big week. Big up today, tomorrow. We're up 236. We were down 300 yesterday, just a one-day thing. And we go down and we keep coming up, and we don't let too much of retracement happen in any of this circumstance. I'm looking right here, the dot trigger. The open is 602. So that's for the week. Minimum number 552 so far for the week, but looking for a retest 602. But what happens this week and by Friday will tell us a great deal if we're pausing or we're going to blow through. Should be a big candle, and I mean big candle in terms of completing, above the prior high at 800. That's 300 points from current levels. But you're right there. This is where these really tight windows, you get a signal, you check back, you get 1, 2 dot. I mean, it's perfect. You're in a super tight window where it really matters. Really matters. Where's the prior one? So the butterfly, is it trying to get bypassed here? 21,860 was the hop level. T1 was at 1853. Amazing. All right, what are we going to do up here? So it is similar to what we were dealing with on the daily in the beginning of the year. Patterns, some oversold action. Here's where we were right there. That was right there. Didn't confirm yet, but that was January's meeting. And there was something here. I think it was a smaller butterfly there. Let me come back to that. Regardless, I talked about this yesterday in the Discord, and this is also another great sign. Yesterday at 07, 23076, we checked back this HSI arrow. And so we're up today. We should be green tomorrow, and then that's going to be a dot. And I want to show you guys something that I'm working on currently in terms of optimization and kind of multiple signals, multiple readings of HSI. This is a big deal that we're going to have a dot not only here, but at higher than the last bearish dot. All of this is proprietary harmonic pattern collection, but the verified signals you cannot ignore. Where's the last one? Let me show you where that last one was. Yeah, it's kind of like where we were back in 2023. I also think 2016, looking for these similar situations. Bearish pattern, blow through. Here's the sideways dud, and then a high level dot. We've seen this on a number of individual issues currently, like NVIDIA. Google did it, and look at Google today. I'll get to those in a second. This is going to be what we're triggering off of and respecting. Bearish patterns that go nowhere, go sideways for a while, and then put in a counter bullish dot to send it. This had a pattern too. But that's really going to be on any retracement, a simple daily dot to get us going. And we're going to have one tomorrow on NASDAQ, which means this pattern's failed. And what are the big targets? Okay, for NASDAQ, guys, the big psychological number of 25K is already, in my opinion, it's just a matter of time. Like everyone, I think a lot of people just psychologically will be targeting 25K, same kind of ways they targeted 10K. But what are the measurements here? Because there's the 1618, excuse me, going up to 2024 right there. I mean, it was perfect. So let's think in terms of measurements. There, that's the 1618, and then 1902 was perfect, and that was then off of that zone, that 1618 1902 zone. You had a reaction, and now it failed. So that's also something to consider. Where let me bring it up. I'm going to bring up the illustration in a second. You guys have to understand that this is a change in character here. Not only from here, but literally from here forward, because you've now taken out that initial zone, the 1618, 1902 reaction zone. Okay, had a reaction, great. I mean, that it did what it needed to do within this uptrend. So continued this to go higher, on that path. Yeah, we've come quite a bit, but understand harmonic kind of framework. This is a new character here. Above that, I guess it's like 22.2-ish, 22.3. We're in a new environment. This should no longer react, and the next set of levels, we could say 224 is like 24.5, 24.4. That's been a few numbers. I'm really looking for this 2618 expansion now, and that's 26.6. Give it till January, but we've already started this. 2 months ago, we started kind of going into that accelerated behavior against the last correction. So that's where we are. I mean, it's again the whole. I think the only thing that beyond what we talked about in January was that this went down lower on the weekly to the weekly targets, not the daily targets. And we will still have more of these on the way up, but the general path trend line continues, and I'm going to line it up where we'll wait for those moments to come together. It's like this. You guys know this has been, this continues to be. I mean, the assumption all along is that we're just on this aggressive uptrend path like that. There's no reason why the money supply, everything I showed you with what's currently unfolding, look, we're not going to be pulling in money anytime soon, barring another COVID type situation. And even with that, that was a short-term correction. I think we'll get some signals that will, if we're going to get something like that, it will probably get it. It literally might be next week after the dot. But let's just see. Our goal continues to be waiting for, in terms of bigger moves, are we going to get pullback and go again, or is this just going up straight to the top end of the channel? I think we probably make a run now up to the top end of the channel. That's monthly, and again, all of that's like top end of the channel. We get to the end of the year, it's like 26.3, 26.5. Where look, just write it. And I think 2025 was a lot like the COVID low in 2020 or 2022. A lot of similarities there. That's where we are. Like, if we're going to stack harmonics against all of this, my point is let it be kind of let it be like a mirror. Let it be kind of like the filter of the distillation of signals, because there's a lot of instances here. You go back in the charts. I mean, again, I go back like 15 years ago, because there was a lot of the same narrative. Earnings were too low, GDP was an issue, the debt load was an issue. I think it's pretty clear that the debt is just going to continue to grow, and it's not an issue. I mean, it's an issue in a lot of other ways, but for the stock market, it's probably what is the leading reason why we just are going to continue to see money to come in. They're going to print more money, they're going to spend more money that will flow into the markets no matter what. Well, our job is to look for things like this in this bear market, in this bull market, but looking for bearish patterns that actually fail. And how they fail is important. Here, what's that, 2013? A deep crab off of the corrective low, you would say, all right, 1618. Here, let me show it to you. It's like this. We would read the patterns the same way, but what I'm saying is that we're going to look for failure signals and give a lot of weight to those failure signals, like a counter HSI there. We had beautiful pattern, T1, confirmation a little bit high. Sound familiar? That's a weekly chart too. Confirmation a little bit high. We pause. And I think that's like 12 weeks, maybe 16 weeks. Then we get a counter dot. Guys, that's right there. That is the chocolate and the peanut butter. That's the secret sauce, the continuation signal that I want you all to go to town on and look in your charts. The trend up. Okay, every dot, 1 and 2 and 3, 4, continue to go higher. Now we have a bullish dot against a bearish pattern after a bear market. Double dot even, what happens? It doesn't care. It continues higher. What about like amplified? Okay, because here we have HSI triggering, you would think up there in a NASDAQ. I was consulting for a hedge fund at this point. Okay, and the longer term chart was still up. I was looking for at 3,500, looking for 5,000 retest on NASDAQ. That was like 2013, 14. And the fund manager to me said, XYZ, there's no growth, deficit spending, interest rates, all the same stuff that we hear today. All right. Regardless, once we had this counter HSI signal, once we violated the obvious pattern levels, which was like 3370, 3400, you begin to see how critical that is. Counter dot. And the other difference that we see also is higher level, like what's the trend of the dots and the arrows? Higher, higher, higher. Okay. And then if it's supposed to be resistance, well, reaction higher, resistance, another higher resistance, dud, sideways reaction. And this is how we're going to look at a lot of the current signals. We have one right now where we go through, like I said, 3 to 5, maybe 7 weeks, even with the dot, sideways correction, pause, get a counter signal, and go again. That's where we are. Here's NASDAQ. I mean, it's just, has continued to do this over and over again. So now, today, what do we do? What are we doing? All right. I would be looking for two things. One, expect consolidation now, sideways at these levels. But then we're going to look for signs after the digestion phase of, I would even say, like, look for the last dot. Something like this. Can we get a counter signal like that? Maybe we get a counter signal somewhere here in the 23, 24-ish level, and then we go again. Wherever it comes in, that's going to be the trigger. I would say go even the daily, okay, because our last HSI did trigger last week. No check back. And on the daily, again, same kind of a conglomeration of signals, but that combination matters. Look, hop level confirmation right there. The first day we would even think about that as an important pattern was not until the 14th of July, 6 weeks ago. What happens? 3 to 5 window. No rollover, goes higher. 5 to 10, much higher. You've failed it already. You know you've already failed it. Unlike yesterday, perfect retest check back, green today, green tomorrow, at a higher level than your last HSI bearish signal. We're going to have a dot here somewhere at the 23.5 number. It's that exact signal I want all of you guys to focus on as a continuation failure. It's one of the failure strategies we talked about back in June. All right. We get that, then this market does move higher. It moves higher now, or it moves higher after 5, 7 sessions. And I said that yesterday as well. I'm looking for this to print a dot tomorrow and then start a resumption soon thereafter. Like, I think it's set up for next week. Assuming, that's going to be the first higher level bullish dot. Not only with that, since the last daily or weekly, daily dot was there. That was the last bullish daily dot. Not of just pure looking at dots here, not a lot to go on. It really was a big flush out. I mean, really the confirmation, everything was 19K. But we got to what was that, 16.8, 16.5, and then look at where we are. I mean, it's up 50%. But this is going to be an important continuation. And it's probably coming in tomorrow. So we start tomorrow. Look for that tomorrow into Friday. And this is set up all of that for the larger breakout next week. And we take this again above the prior all-time high, like 24.1. I don't think that's a stretch. After the dot. So it's going to involve some patience. Really, I want you guys to understand there's going to be specific combinations of HSI, pattern, levels, and then the way we read it. I think everything we can essentially apply a 30 bar window at every daily signal. And let's talk about Bitcoin here, because the Bitcoin situation, let me play this. So this is what we said back in January on Bitcoin. Let me bring this in. Again, 9 months ago today. So this is what we said.
Put in a dot, we go sideways and we go again. Sideways, go again. Sideways, go again. So in the short term, HSI reacted. We're going to retest it. Again, I'm just laying out how the sequence of the software should be showing you where to go. We're 115, 119. We're 98K right now. With the ultimate target is a 3618. I think that's by May, June-ish. If we get to 3618, we're looking for profits. 215, 220 on principle. That's where we go. Those are the major markets. All right, I'll take. Let's go like 10 minutes.
All right, so that worked. And what did we have in there? Okay, there's the weekly. Let's get back to where we were. What happened? All right, this is where we were on the weekly. There's January 1st. We had the check back, bearish, and the dot to send it down, and then 76K, which you guys know was our last step on point. We're here at the moment. We have a dot. We're rolling over. Maybe that was the one thing I should have been respecting. Okay, that we get that dot retracement. All right, so be it. And then we're looking here that, all right, watch HSI right now. Because wherever this gives us the inflection on the weekly, that's likely going to be the resumption point. I'm watching this. I would love to get oversold one more time with another HSI like we've done the last few. So maybe we need that as the next launch pad. But beyond where we're at, nothing changes on that scenario. The first stop is 160, which is the 2618, and then will we get to the 3618 at 210? I think we can really clarify that come October, November. A lot should be sparking up really soon. We should see things like, we should be continuing off of this kind of a thing. Here we have bearish pattern, sideways dud. How do we know? There's another counter signal again. And then look at the other situation. That bullish reading is higher than the prior bearish reading. That stuff's important. Bullish reading higher than the prior. That's important. That's why I'm looking at this 111 area as basically that's all she wrote. I know a couple of you guys were wondering maybe we get to 93K. Not in this setup. And then here's the final piece, and this is going to be things that we'll focus on more and more. I'm talking to my partner on the software. What are the best ways maybe we could combine the indicators? Because here we're above the 50, rocking. Here we've broken out. Okay, there, going above the 50, breakout, got it. And this is where we can run. We get above that prior reading on AMP, like 53-ish. then we're really in a great spot. I like what's going on here, guys. I'm not concerned about Bitcoin at all. I was early. I literally said I thought we were mooning right here, but we have to go through a retracement. That was, I think that was a little premature, but that's fine. I think what we really needed to see was that to blow through that level. I mean, really blow through like 125, 130. Not happening, but I'm still looking for 111 minimum right now, back to 118. This doesn't change. Okay, and we cracked the 50. We're in business. So all of that lining us up, nothing changes. The numbers on Bitcoin, they don't change. And we go back to, just go back to 2020, guys. On a proportional level, this is really where we're at. We're looking at this. This might even be a little bit better because you were able to put together kind of a crab formation. But look, there was the 1902, like right there. And this is what we're looking for. And I think this is a good representation of where we are exactly in this time frame. We're here with a dot, and we're going to digest that dot. We form the dot this week. Then what happens? If it's a failure, literally starting next week, we retest it and then we fail it within the next couple of weeks. So I think this whole thing where we are currently gets resolved before the end of the month, or even maybe by mid-month, and then we start this kind of a segment from there up to the extreme levels, maybe even another dot. This is the move. If I'm right about this, we're in this bar, which is January 21, ready to fail it and go higher. And I'll show you why you needed another dot is similar to the current situation. Because look, this HSI and that dot are related. That HSI relates to that dot. This HSI relates to that dot. The nature of HSI with just the arrow is like it's a temporary kind of marker. Definitely want to see the dot, and then the dot has to produce behavior, immediate behavior after the retest. Like here, this bearish dot, what does it do? Forms the dot and then goes 1, 2, 3, 4, 5, 8, 9, 10 bullish straight on through. This one, retest 1, 2, 3, 4, 5, 7 straight up. This dot's different because by bar 5, you react. You're not going up. 6, you're lower. 7, 8, much lower. That is different from here. Go to where we are currently. Okay, where we are currently is like this. 3, 4 bars rolling over and then come right back down. So the checkbacks happened. I would prefer to see this happen, this counter HSI, come down one more test and then go. But it's really about this. I'm looking at the daily here. Daily's already oversold against a bearish pattern. Again, we haven't fully turned around yet, but you see the kind of temporary nature of what's going on with those signals. I mean, if you go dot to dot, even, it's been pretty remarkable for Bitcoin. Dot to dot, dot to dot. How does it fail? When it retests, it fails immediately. So if it's not failing immediately, then you've got something here, at least a pause. And even the January correction Now, I mean, everyone was freaking out. I mean, I was saying 74, 75,000 as the next continuation point. It's a blip on the screen. So I think that's the other piece to consider, guys. We're going to continue to have 20%, 25% corrections in Bitcoin and still maintain the uptrend. I want to see it hit the extreme targets. I really, so Bitcoin's like this. Let me just be clear right now that we're looking for immediate target. Minimum cycle target is going to be the 160 level, and that's a 2618. And let me adjust that. It's here. Yeah. And we'll deal with bigger targets possibilities later, but it's like that. 155. I'm saying 160. I'm okay with 155. So any signal, any bearish signal, all right, should be higher than the prior signal. And that's one way to know that is it just a reaction. Like if we had price action that developed and then we maybe had like a lower dot, like current dot, last dot was at 119. And let's say we consolidated, bounced around, came back up, and then we had another dot at 106. That would tell me something's changed here. But we're still producing higher dot, higher dot, higher dot, higher dot. To me, that's just bearish pause. Next jump off point, I just for now, in the short term, stay on the 4 hour. And there's lots of 4 hour patterns here. 118. That's it. The bigger acceleration is obviously above that 123, 124. So keep an eye on all of that. That's the way we're framing it out, guys. I think it's, I know I've thrown some crazy numbers out there for a while. And I definitely want you to understand that there's a fundamental analysis here. All right. And I've been watching it my whole career, really started in earnest in the early 2000s, but it doesn't matter. I think this is where we all kind of just come together and do the measuring, and we stop listening to people who are saying, oh, market's overvalued, the market's undervalued, and just kind of make unilateral statements like that when the whole thing is about allocation and money supply. And so let me kind of finish up with gold and explain why this is the asset that tells us what is happening. And I've been hitting the table on this for a long time, guys. The fact that gold is it's going parabolic. There's no doubt about it. It's going parabolic. We're going to see 4,100 really soon. But what does parabolic mean? And I have to go back to the 70s, just so you know. Okay, we're doing something like this. And it's, this was the first Bitcoin, quite frankly, right? After they took it off the gold, took off the gold standard here in 74, it had a bit of a correction. If I go back even further, I'll probably show it. But this is what I'm talking about. We make general assessments of like 1618, 1902. And then what happens? The character changes here. And then we're looking at minimum 2618, 337 to 3618. That's at 430. Okay, after the fact that you went above the 1618 range, the low, folks, the low was basically $100 here. The high was an 8x above 800, and then all the way back down. You can't even do a retracement like that. It's, I mean, it's, I don't I don't go above a 3618, and I'll tell you why. Because to me, once you're at a 3618, guys, the only thing you're looking for is a red candle. All right, you're looking for a red candle. Here's 3618, blows through it. There's the first red candle. There's the bearish confirmation right there. The, the maximum measured level was 435. The confirmation level was 654. Something like that's going to happen to us. And when it does, and then we start printing monthly red candles like this, no longer making progress, okay, then I'll say it's done. I'm going to say this. We are probably about here. 350 is a lot of similarities to 3,500. A lot of similarities. Thinking it's going to 4,000. In this case, 400. And it goes to 800. Could it go to 8,000? In a blow-off move, yeah. I think there's a lot of rhyming going on here. Look at that butterfly right at the low. Amazing. But I think there's a lot going on similar to what we saw back in the 70s. And here, go like this. I mean, you can't even do it. You can't even do like this there. 2618 was 3350. We talked about that for a long time. And then 3618 is all the way up here. I can't even get there. Your 3618, guys. So we've gone extreme. This is where the clear character change happens. 3618, it's like 4190. But look at the same way that it was unfolding. Okay, where's the 1618? Right there. Hits the 1618. What does it do? Because there's the individual bar, 3 months sideways, and then breaks out and in a new accelerated fashion. And look at this monthly HSI. There's so many things here that are screaming continuation that you're not even worried about it. This is nuts. This monthly amplified is nuts. All of that tells me right now, this full money supply, money printer is fully on, and it's just piling into gold, where gold is going to do not only the measured move, but guys, if we did a similar move to what we did in the 70s, there's the measured move. Okay, that's our 3618 assumption. And just know, and we all can agree, we've been in an accelerated move on gold, which is the kind of asset inflation we want to see. We want to see paper assets get inflated. We want gold to do that, reflect that. And then if we were to do a similar move, okay, as what we saw in the 70s into early 1980, it's not here at 41, it's 8K. That's the kind of move that happened. I think right now I'll take the measured move. I'll say 41, 42 up to 5,000. And why I say that is because as long as that continues, all right, the market will continue to get more overvalued. There will be more money in circulation. Yeah, I mean, we got to find out, really what's the tipping point in terms of inflation and interest rates. But this is a phenomenon that you just don't get in front of. You ride this phenomenon, and we've been here a few times before. Even to a lesser extent, there's the late 2000s. It's like that, and look at the same type of character here, and that was a massive cycle ditch. 1618. All right, and then there's 1902. What happens? It goes extreme, 2618. That was a minimum 2618, and we're going to take it in chunks, 4100 now. But between 36 And 4,100, that 500 bucks, $600 from current levels means that this asset inflation is fully on, that you're not as overvalued as all these people are saying. It's not done yet. So we're at extreme numbers. And I want to stay with these measured levels, but more important, understand the type of character we're dealing with is extraordinary. And you're only here maybe once a decade. You get this kind of crazy acceleration. This is once every 20 years. Something like from here, bust it, or from here 1618, bust it. 42. I'd say 4,200. But gold's the key. Gold and Bitcoin. I mean, Bitcoin's just not as proven, but Bitcoin's showing us the way. And as long as that continues, everything continues under the same assumptions that we've been operating on for the last 10 years. More debt, more money in circulation, more deficits, and that is only going to continue to intensify. So these type of markets, they run for now to those big levels. Yeah. Silver. Well, I'll take some questions. Okay. I've got some questions, but I think the time machine shenanigans. You know what? That's Dream. I listen. A big part of what we're doing with harmonics and basically distilling that framework is to do exactly what we did in January. Exactly. Lay out the framework, lay out what we should be looking for, and then follow up on how it unfolded. And it unfolded almost ideally to the T. And when I played that clip, the S&P 500 in January saying, look, this should pull back in the next 6-8 weeks. It took 12, but we were there. And there'll be definitive signals along the way. Take advantage of it. I think we will get this pop. You get up here to 41, 4,200. We'll see. We'll see exactly, what that portends for going even crazier. But silver's like this, and silver's got massive patterns. It took a while. I mean, it took years, decades. It took decades to not shoulder innovations. Let's try this again. Like this. Okay. That's the big bat pattern. We've talked about at 13, had targets at 35. We're now almost 42. The all-time, there's two numbers we're looking at. All right, 1618. Yeah, maybe not. Maybe not yet. 1618 because he was saying he was saying 100. I don't think silver goes to 100, but I think if we do something crazy, we go to 73. But that's not where I'm focused. I'm just focused on 45.50 for right now. We'll know at 45 to 48 whether this is going to bust it or not, but straight to 40, 45, 50, 46. And then if we're going to really bust it, we'll know. And this will take longer. This will take more time, but immediately we're running to 886 retracement. And that's silver. And again, having silver running helps the whole store of value argument for Bitcoin and asset inflation argument that we've been talking about for a while. Yeah. Couple other questions. Okay, Bitcoin. Why ignore the shark on the daily? Great question. And let's go through it. I don't think we're totally ignoring it. We have this weekly dot level here. I agree with that, where it's another pause like we've seen the last few. But I'm not ignoring this. This is the deal, okay? You have this shark pattern, and it did its reaction. So consider that the type 1. And what happened? It ran into some counter HSI signals at like 104, 103, and got sent back up. But here's, just to highlight a couple of these things of why. HSI, bullish, higher than the last bearish one. Another bearish HSI up here and there, but they continue to be at higher levels. A little pause down, generate another signal. So every time this hits hop level 115-ish on the shark, yes, it went higher. It's just a little reaction. The action's been sloppy since you have left the 30 bar window. It's like this. You're here, complete. 30 days later, you're there. Didn't get the type 1, and you have 1, 2 counter HSI signals. And within, 30 bar 33, 35, you're already working your way back up. So to me, the way to read that is got pause. Just pause. And pause within this kind of a zone. Using the daily zone like that. If this is only going to be a sideways dud that will eventually fail, how many bars have we been in here? Has it been 100 yet? Maybe 90? Yeah, we're 100 bars right there. 90s like that. So why do I say 90? And I talked about this in the June session. Just generally, again, guys, don't overcomplicate it. The 30 bar rule is just a rule of thumb, but it works incredibly well. Where we're looking for 30 bars to complete the type 1 reaction. All right, 30 bars to go back and do the return. And this is like the extended version. But this would be the kind of framework we'd want to see. And then another 30 bars for the type 2, whatever that is, whatever the movement is off the 2, regardless. 30 bars is over, 30 bars is over. 30 bars, that final 30 bars here, that all of your movements, that's all you did. You're nowhere close to target 2. You're not doing an ideal thing. What I'm saying is this is going to fail. And it's probably even better to look at past examples of how patterns have failed after temporary reactions. That's why I'm saying that. Okay, we'll get a reaction off of these levels, but that's about it. Same what we had here. And yes, that was only a reaction there last summer, and then a couple of the others. You're getting to a point, and this is a good example off the low. Okay, shark pattern right off the low, did a reaction, it comes back, there's confirmation, it goes nowhere. And you just keep going through where you have a bearish pattern, it comes down, and then it continues. And then it continues. And that's what we should be looking for. So I maybe to clarify it, let it do its reaction. But what we're looking for is then the return failure, because it's already outside the ideal 30, 30, 30 window. Yeah, there's a lot of support. I know people are saying 93 or even at 101 or 104. I'm really focused on 111, guys. I'm focused on 111 uh, because of the 4-hour time frame and this counter dot. That counter dot's like 113, but look, the 4-hour time frame is this. If we really want to look for patterns, you're going to see it like that. 111. Get this back to 118. I know I'm talking big numbers, but I'm always going to be focused on most recent support resistance possibilities. So there, off the deep crab from back in July, we did the reaction. That's all it is, kind of a stretched out reaction. Now come back to like, yeah, it's 118, almost 119, currently 112. And if you're looking for where does this thing go crazy and finally go extreme, it's going to be above these levels after the fact. So we'd spend a couple weeks down here, another week down here, maybe. Maybe we do like a 1-2. But just understand, this is what's happening with most bearish patterns in strong uptrends. If it's crypto or stocks or whatever, they're pushing, they're getting allocation, market caps expanding, you do a reaction, and you continue. And that's the same here. That's why. Due to total, except for the top 10, isn't that the others index? Others index is like this. That excludes the top 10. I said this yesterday. I've told you guys too in our group. Like total crypto market cap chart, despite all of the fluctuations, is I mean, that's a smoking long-term uptrend. Smoking. So right now, 300 billion. I mean, this is like Bitcoin before big numbers, kind of a thing. So I'm not too concerned. Reminds me a lot of Ethereum. Yeah, there's a bearish shark. What on the daily? Yeah, bearish shark. But guys, please think about just reaction, especially first time, or better yet, until you can get amplified and HSI to completely break down and get under the 50. They're just going to do this reactive sequence. You know, here, couple of dots, 2 dots, quick reaction down, and you get oversold already. That's all you're getting. And I would say here, another HSI and a dot, and what are you doing? Where are you 3 to 5 bars later? You're right back where you started. How about 10? You've gone nowhere. How about 15 or 20? You're not doing anything. Like this. There. 20 bars. No reaction. 30 bars would be here. Versus back here, double dot 1 and 2, and within the first 5 bars, you check back, you're reacting, you come down. Or even just, look, should be a reactive trend line like that. At what point, even we're riding that trend line, make it an easy on yourself. Where is that breaking out? Obviously, here. So the first attempt of that shark is done there. Send it back to the hop level. And we're at another point now where we're going to break out of that little consolidation downtrend. You're 1-2 days away from doing that. I think that's the key here. You're really close. It's not an easy read, but guys, we're really close to kind of not having a retracement break out of this. You know, a few more days, a few more bars. They have to be up in here, and then you clear out. Like if you want to know when crypto is going to go gangbusters, this chart's above 330, currently 300. So 10% higher on the others, take out the top 10. That's how you get a lot of them moving. Yeah. So BTC gets a type 2 reaction reversal. For now, yeah, back to 118 for that type 2. Back up there. All right, couple more. Let me start over. Yeah. Yeah, I'm reading your comments right now. Oh, we can look at Google. Yeah, I'll go to that. And Doge. Yeah, I mean, guys, where do we want to be though? We really, I can't, I really, if I'm right about all of this, and I think I am, a lot like the prices we saw back in April. If we get this retracement, even if it's 2 or 3 weeks, it's where we're at currently is almost at a point of no looking back. Markets, crypto, all of that, and you've already made all the progress you need to make. There's the weekly. Okay, that is others. This is kind of like Ethereum before the bigger move, but total crypto. This was our original plan for total crypto market cap was to do the following. We hit 4 trillion, but no, we're looking for this. All right, we're looking for 1618, 1902 minimum, like that. B point 886. It's a deep crab. It goes 1618, which is 4.4, maybe as high as 1902. I think it's for this cycle, total crypto is like 5 trillion. It's a deep crab. This would be the zone, guys. Here, 1902, 1618. It's like that. That's for the whole market. But it's working out, and I would just say within that, okay, just hunker down on the dots and patterns. Like here's the bottom trend line of that weekly there, pattern and pattern and pattern. Um, and I strongly encourage you to think within the context of pattern and framework and not narrative, because our whole assumption that Bitcoin, gold, stock market are receiving fresh new allocation, money continues to flow. We just need to focus on, all right, getting patterns right on the smaller time frame within the retracement, and then stuff like a 1 and then a 2 with confirmation there, and go again, back down and go again. A lot going on there. There's definitely a lot happening. Some of the ones that we continue to watch, Ethereum, obviously, like this 4400. Where's the pattern? There's a pattern right here. Yeah, it's a T2, 4237. So that might be it. I was thinking maybe we could get to 35 or 3600. I don't think so. This is what we're looking for. And I've said it so many times. The type 1s love to run to target 2. So be it. Target 2 and then get the dots. But that is really like a crypto type 1. And then comes back, T2 generated, kind of some confirmation at like 43-ish. But the fact that T2 generated right underneath the green line, that tells me it's ready. I think 45.76, 100 higher now. I do think this low is in. And at what Ethereum's doing is it's not. I don't think Ethereum's looking back. I think whatever that was a gift. Really wish I would have hit it like I hit it in 2020, and I might have missed it, but I still say Ethereum target, guys, from where we are now, like 4,000s ish, 44K. We're ready to bust the move and basically put in a butterfly up to the 127 level, 6K. I think that's easy. That's Ethereum though, and it's probably, if it hasn't already generated, maybe we get a little more. We have this counter HSI signal there. Okay. How do we know? We don't know yet. But what are the signs is a better way to say. Here's Ethereum. How do we know that it's not going to give a full type 1 to 3489? Well, pretty clearly it's been contained in the primary XA to BC zone. And in how many days? There's T1 on the 13th. 30 days is like that. So frame it out. You got till next Friday to get down to target 1. And if what we're doing within the first, it's probably 20 bars, is you reacted, counter, great. HSI dot, great. Those are ideal signals. But what are you doing here? 3, 6, 9, 10 days later, that's all you get. That's it. Push me higher. Push me to a hop at 55, 5,600. From 4,000, 4,100. Action's been strong, guys, with Ethereum since that low. Just don't know what the hell was going on with this low down here, but that was it. And now, yeah, probably ready to go price discovery. That was the big flush out. There's other ones though. One or two of the crypto, sure. I'm not a Doge fan, and maybe that goes to 30 or 40 again, but I think there's better spots. I think you're better served in Bitcoin, XRP. Doge is a shark to 5.0, but it's not trending. And maybe we get a recovery move, and percentage wise, it could be great. But I think you want to be looking at XRP, BNB, uh, Bitcoin, obviously, maybe Solana to a lesser extent. I mean, these are big stuff. High flyers, the big 10, 100x baggers. I think it's more about catching the ones with a degree of certainty that's better than the rest, and that's Bitcoin. All right, so a couple more. Yeah, let me come back. I'll look at Sui in a second, but again, just to follow up on that comment, Maka, I hear you about what you're saying on the shark. Okay, and so the comment is that, am I dismissing the obvious harmonic of the shark? That, if you draw it, I see what you're saying too. Like, not only this shark, but the kind of shark that's being mentioned here in the discussion comments is this kind of a thing. Will we get another shark like this? I don't disagree that this has all the characteristics of a shark, like that, back at 100K. Could be, but I think more so with the higher level of confirmation here, even though we've dipped down, I equate this to a very similar situation that we had back in late June to that. Also, look at our indicators, they're pointing up. So I don't think we'll get down to this shark. That's what's being asked here. Why wouldn't I look for a shark? Because I think this has already failed, and we're looking for the higher time frame to basically run this thing not only from back to 124, but well above it. But I'll consider that. If we don't hold 111, and I mean literally in the next 3 to 5 days, then yeah, maybe I'll reassess for something a little bit deeper. But nothing has changed on our longer term strategy and how we're looking at any retracement, just a retracement. So we get oversold and then we'd look to go again. Yeah. A couple more. Rivian, crazy today. Really? Let's look at Rivian because low floater, look at that, 14. So what about, was it Neo? Look at Neo. That's pretty good. Coming back to life. Neo, Rivian, what was the other one? Lucid. Oh, Lucid was a return. Yeah, that was a return reverse split. Never a good thing. Reverse split's not a good thing. Yeah, Neo and a lot of those low floaters they're okay. They're okay. But I would be going with the bigger stuff, and we talked about Tesla in that during our conversation in January, and I'm still looking. I'm waiting for this thing, and we break out above 350 in earnest, then it's all on. They're really close. We never got to 267, so close, and that's what I was waiting for. So I'll look for the next level. If it's 4-hour HSI, something like this kind of a thing that is happening. Type 1, back down, go back for the 2. But this is trending. This is a recovery trend. That's Tesla. Nvidia, just talking the big ones, guys, it doesn't stop. It just doesn't stop. You're going to have these retracements, what have you. You had an amazing 30% correction, and we'll have more. I mean, if we had a 30% correction up here, we'd be back at 120 pretty quickly. But for right now, I think double HSI, really 170 is the number. I'm not too concerned about it. And a lot of these, you would think, Nvidia doing, having a market cap of 416 trillion. 4 trillion market cap anything 10 years ago, you would have said that's crazy. That'll never happen. But it is. And now we have all of these other entities. Here's Google. I mean, this is a massive move for Google today. And they finally broke. This is like pure price discovery within the longer term trend. Nothing changes. People has been I said this yesterday, it's been a laggard for a long time. Okay. But this continues. That longer term uptrend continues. If anything, we're going to try to do something accelerated here. It's impressive. There's the monthly. Google. I mean, all of these continue. You're at the top end of the channel. Yeah, you're overextended, but it's a lot like this. Next 2-3 years, if you can draw trend channels like that, just kind of that's your expected path for all of this. That's a big run. That's a great one. Up 17 today. That's a big win. Yeah, I'll look at some of those other ones. What's up? Steam wants to look at Pengu. Pengu. Yeah, I don't know. Do we want to mess with this stuff? I mean, really? Currently, right now, just sideways here at this high level. But I would want to wait for a target. Your 3 cents. I think this is begging to go back to target two, and it's a meme coin, so it's vulnerable. That's my read on it. I'm not a fan of that kind of stuff. I think there's 20 other better crypto out there than something like that, and hey, you might work. Right now, counter dot that has to go up now. Cannot roll over under 2.8 again. What's up, Hitesh? She's asking, sometimes pattern does not complete type 1 by a little margin with a counter HSI. Should we consider it manually? No. No. Look, if it falls shy of the number, it eventually is going to come back around and tag it. And if you don't have confirmation, let it go. Yeah, it's still going to work. A lot of those type 1s still work on reactions. For me, if I have a dot after the T1, I have a lot more clarity on where I should be looking for the reversal inflection. That's what's important. Near. Man, that's done nothing, Justin. Near protocol, I know we looked at that for a long time and it did nothing for a year. Near, over a year, done nothing. There you go. Butterfly down here, but it's probably more like $2, 214. Nice back-to-back patterns. Amazing that was, what was it, 850? All the way back at 240. That's tough. That's just a big retrace. Yeah, I mean, again, it's okay. You're not too far off of all-time lows, so that's not the best. And you're really dealing with this kind of a zone. That's it. The other thing is that clearly we're not in any kind of recovery mode. I mean, we can't even get to target 1 up here. So you're really defined by this. And I think 211. Come back to the XA level, 2.11, and then we'll see if there's something there. Couple more, guys. Yeah, you got it. Um, Justin says he's looking for the layer 1s. And there's a lot of those. A lot of those have started to move. What are those? Like Algo and H bar and CRO, and maybe not CRO, although that really ran. There's Algo. Not bad. Anything on the weekly? That's a market cap chart. Yeah. But remember, Algo was like 15, 16 billion. Now we're retesting it too. This would really have to get going from here to even have a chance to double. I mean, H bar, I know a lot of people are hyped about that. 22. Yeah. I mean, there's a dot here, but not a lot to go on. I mean, I would wait. I'd love to have a retest of H bar. I don't think it's going to happen though. But type 2, I mean, I'd show you a type 2, like Ethereum Classic sitting on a type 2 right now with the weekly All right, back here, 1648, and it's firmly in control. But the bigger deal is this did a 1 and 2, and it forms a bat and goes type 1, and now 2. So that's 2 of 2. 2 of 2. Not yet. Got it. Couple more. Flipper wants to look at Mara. Another reason why we stay with trending environments. I think Clean Spark's better than the others. And if you're going to speculate like this, why not make it a cheap one? Like go for the, the 30, 50, 70 cent penny plays. Yeah, I mean, look, Mara at 15, obvious whole bunch of levels. Can you get back to 20? Yeah, are you going to do anything more than 20? Probably not. That's what it looks like. I really need to bust that out. There's the weekly. So far, so good. I mean, it's the IRENs of the world. They've been impressive, making new highs. 29, that was amazing. That was 5. What about like Hive or Hut? Hive Digital. It's kind of like Bit Digital. Let me look at Hut. Yeah, they're not all the same, but when you do have patterns, let's not ignore. I mean, that's ideal at 1138, now 27. Well done. 27 in 4 months. All good. SoFi, it's been a while. Wow, 24. That's a big move. Again, another counter signal. So HSI bearish, and then you go bullish with a top candle here. So 22. Look for that like little check back at 22 on SoFi for it to really take off. But it's been impressive to say the least. Yeah, like this. X, A, B, C, and there's D. Watch that 886 there. Maybe a pause, but clearly you cracked a new all-time highs. You're going not just a little higher, a lot higher. It's good. It's just you're at an 886 point, so let it react. I'd bring that back in a few days, maybe next Tuesday. All right, Bitcoin Cash. Here you go. Did we ever break out? Not yet. 586. Okay. I mean, Bitcoin Cash. I'd almost wait for the breakout, like go here and then break above 715, because that sets you up like this. That would be your maximum recovery target. Has to get through all of this 600, 700 top heavy stuff. I know why. It just, that hasn't moved. What's up, Tubes? Hut? Isn't that Terra Hut or whatever? Hut 8? Yeah, you're back to back. Gartley at the moment, 27 bucks. Just hit today. I would say maybe as high as 31 because you got confirmation up there. You got to retest that HSI daily. But that's all right. It's better than 11, better than 8 for sure. What's Supa? It's Supa harmonic or just Hut super harmonic? It's super harmonic, meaning Hut is harmonic. Gotcha. Uh, okay, Dream, you get this. XRP, guys. When? When? Well, XRP's ready. Come on. Hold on. Sorry. There's XRP. The daily, like this. Couple of oversolds right here. You pretty much have to hold this 84 level for now. The 4-hour, meh, patterns, but you have a counter HSI. Looking here, possible roll. Maybe we get back to $3. I have to watch that. And then XRP in the last one is a type 2. It's ideal situation. Both of those patterns completed. That's 280. That should be it for now. And we begin to go higher on that, not only the 4-hour, but daily, weekly time frame. They start to turn up like that. Couple more. Charlie Munger says the first 1 million is plain. Then it's uphill from there, I guess. Didn't he die? What's up, Breezy? No, I didn't get to SUI. So let's look at SUI. I talked about that yesterday, and it's got a lot of things I like. And almost down there, 308 is the number. We were close 2 days ago. Huh. What's that? 380? Yeah. So 380 for the return. It's just setting up to do so. Like the fact that it hasn't come down and you're still on this uptrend. So I would say take it in chunks. The next chunk is down here at 308. Go slow. Add to it. Add on oversold markers, yellow dots. Get the software. Yeah, I got it. Yep. No, it's just there's a lot of these that are setting up like this. Now the question is, how do you know if this is really going to go and do something like this, 12, 13-ish or something, or we're going to fail? Like I said, we'll know within the first week or two, that 3 to 5 bar window of looking at the whole thing seriously. Just letting it finish this kind of pullback. But Sui, the trender, all I need is 308 and a dot. Cubic. Man, you guys with Cubic. Cubic like that. Yeah, not bad. It's like from 15 to 30. That's a double, but here. All right, if you like Cubic, get ready to love it. I mean, you're looking for this. It did the perfect 1 and 2. Can it finish the type 2? Can it fail the bearish pattern? Because you'd want to typically see it from there and then go back up. But nice structure. Yeah, I hear that. Tron, yeah, Tron is a for Echo Leaf. We've always said Tron because Tron is a real trending asset. We had some patterns up there even. I'm not too concerned. Hold on. There you go. Yeah, Tron looks really good. Would love to see Tron really sail through that zone at 34. Nice confirmation HSI at 30. Maybe it comes back to 30, maybe 28. But typically these go like this. Have the retracement and then go again. So not to jump, but that kind of a thing. Have to just let it play out. That's funny. Bitcoin Cash, BCH. I looked at that earlier, and again, it's just until it gets above 650-ish, 700, you really can't expect much. I mean, there you go. Pattern, bearish HSI, and bullish HSI in a bearish zone, send it back up. Send it back up. We've seen that. And that's what it's going to do. Yeah, maybe. I think I want to just stay with the dailies, though, because the dailies have been so smooth, especially counter signals like this. 552. Yeah, I think, you run to the hop here relatively soon, but is Bitcoin Cash really going to bust? That's what you want to see. Nice trend. The daily looks nice. The weekly's in recovery, but the real level is clear out all these highs. 700-ish, 800-ish would be great. How many hours do you wait for the dot? Oh, you're in a really tight window, 3 to 5. Like here, perfect example. Bearish pattern. Okay. HSI forms. This is all last week's garbage action. Ride it up, come on back down. There's the dot. So then you're in business here because the yellow counter dot, bullish dot's telling you, right, that's ready to be confirmed. Just send it back up into that zone. So you're 596.50, currently 570.87, what was it? 587, sorry. Let me take a look at that. Yeah, 4 hour, that's an hourly shark. Not a biggie. Let me come on back down, what, 560, 565? Yeah. Yeah, I think you're close to an entry. You are close to an entry. I'm just waiting for confirmation on a lot of these. Super, I'm not crazy about that. I've heard a lot of people talk about that. And super just keeps making new lows. And that's not crypto you want to be involved with. It's like that. But that's all right. I'd line them up. Super had a, yeah, Gartley, check this out. So at least it's got back-to-back patterns. 57 is a big number. I think we can get back to 79 or 80 relatively soon. But a lot of these, we got to look for triggers on these, okay? And that's not until 50 lines gets back above there. Let me see, one or two more. One or two more. Yeah, the weekly's overcooked as well. Yeah, unfortunately, the 30 bar thing is you got to manually measure it, but if you remember it, it's not so tough. Okay. Yeah. What else we got? One or two more. I'm going to wrap it up. Yeah, you can set the label length at 30, or you can just do this. Just click the measuring stick and from something like the dot, go 30 bars to the right. Like that. What happens in the 30 bars? Well, you went counter pretty quick, but that's the basic 30 bar assessment, guys. We have a confirmation. Okay, like right there. Tell me what's happening. 3 to 5 bars. There's 3 to 5. Some stabilization. 5 to 10. Like there's 10. All right, progress. And build out your story that way. Something like this, yeah, retesting it was going to need a lot of time before that turns around. Yeah, I don't know exchange wise. Anyway. Yeah, that's a lot going on there, guys. I mean, there's a lot. Look, Bitcoin, I think any retracement you get, you hope for 20, 30% retracement, and then you're playing it maybe longer term. If you're trading Bitcoin, all right, just stick on the 4-hour time frame with yellow dots, but take it to target, and that's probably it for now. We won't moon it until we break out. I mean, truly take out the highs at 123, 124. 115 is still the big breakout level. 111 support. I just think this is time. Let me draw your attention back to a year ago. Going back here. Okay. All of this stuff in here that's the end of September, and we had the breakout off of the post dot. And it really ripped up into December. That's what you're looking for now. Yeah, you're looking for that now. I would say more so even on a daily basis, like retest this area, hold it, and then start to rip. Maybe not this week, but definitely by next week, we should start to be ripping higher. Where we bypass this pattern, it's over. That's all it was going to give you. And then we take on some price discovery targets. Yeah. Question. Amazon? Yeah, I looked at Amazon earlier. But Amazon's another one where we're just doing monkey games here. Did the type 1, and now you did the perfect 2. And maybe we get a dot pretty soon. But it's just another retracement. In this case, target 2 is 201. Be aware that we get down there. I think it is buy. I'm not, I'm really not too worried about it. Yeah, that continues to be the Amazon path forward. It's not a long. I mean, for me, okay, I would be looking for some kind of rollover, if that's even possible. That's Coca-Cola. Not ready yet. Yeah. I think that's it, guys. I really, that's really what I wanted to cover today. Just kind of make you guys aware of what I'm thinking in terms of longer term dynamics in the face of higher rates, expanding money supply, all of that. I mean, we've been through this before. The immediate result, especially after the money's already been in circulation for 3 or 4 years now, is for that to continue. And we'll get a more complex development probably at some pattern. Uh, like this. Yeah. Hold on. Oh, wrong time frame. Here, daily. And so that's where we are now. Let it do summer pause, guys. I did want to say that where I'm not looking for a lot yet. I want to get through the next 3 or 4 weeks. We have a lot of weekly signals. That's a critical weekly signal right now. And so let it come off. I think it's a 3 to 5 week situation. We digest this up here and then we roll over and then we go. Possible levels like 22.5 on NASDAQ, 6,200 S&P, Bitcoin, maybe 104. I'm not really there of much of a retrace. If anything, I'm looking for signals to fail in this kind of a trend. Got to see. Watching those specifically 23,602. All right. Everything else, all on track for the bigger objectives. Again, the only thing I would want to say is let this retracement that's happening right now fall into your lap, and then we'll be looking either here or maybe even a little lower for a dot that corresponds with that. Keep an eye on it. And crypto, it's just crypto. It's going to keep doing what it's doing. We just really seize the moment for Bitcoin to break out again, and the rest of them will run. Okay. We got short-term targets. We got longer-term objectives. And pretty much every daily HSI is going to be a BTFD going forward. Get ready. Used to it. Yeah, I appreciate that, Dream. I think, listen, all of you guys, if you're here now, and let's say you don't have a hell of a lot of money, can you put together 10,000 bucks? Can you put together 5,000 bucks? I mean, everyone should be able to have if you have a job or you're working, I mean, get a 5 or 10K account together and run it, I mean, run it knowing that we're in this sweet spot about to continue. I think all of us have more than that in here. But if you're what I'm really saying for brand new and people listening to the recording, all right, it's never too late. And where we are on all of this weekly stuff, the bigger dynamics of like why the markets are doing what it's doing. Why is gold, up $150 in the last 2 days? It's up like 300 just in the last 2 weeks. Why is that? Because the phenomenon I've been talking about all year long since last year, the expansion of the money supply, paper asset inflation is in full force. The next breakout move is where things go bonkers. And I mean it. Like, we get through this, use this as an example. This can be Bitcoin, S&P, NASDAQ, whatever. Whatever this retracement is for September, we're looking for it to end. How could it end? With a bullish dot or 3-bar breakout or some kind of turnaround? We're still sideways. But once that does, like I said, it could be 3 days, could be a week. But once that is come mid-September, maybe towards the end of the month, we start to do this. And then we go to our 1618 by January. 25, maybe 24.4, 24.5 first stop. Get close to 25. But all of this stays, guys. So If you're under 22K, maybe I'd reconsider in terms of the time it would take. But I don't think this pullback will even come much under prior limit. Maybe it's 22.5, 22.4 maximum permissible downside. But I'm actually more looking like up here, like where we are currently. We get a dot tomorrow, literally could be the trigger to send it for the rest of the year. We're looking for that dot. All right. Everything's on track. That's what I have for the session. You guys have any questions, just reach out to me. And do watch the January thing. I think watching the January recording and then following up and see what we've done will give you even more confidence in what we're saying, where we are, and what the market should be doing from here. You got it. All right, guys, that's what I have for today. Have this session. I don't think we're going to do another session like this. I think we've got it all down. Maybe something halfway, or maybe in January, but look, this is going to be it. Everything else we'll do on Discord, gold members, market report. So follow that material. And if you have any questions, get with me over in the Discord, okay? Like Nasdaq's popping back up. Just popped 50. Nasdaq's going higher. It's loco. You got it, guys. Hope you enjoyed that. Hope that really gave you some kind of some real concrete premises to think about of why we're going to continue, and then the measured levels of where we're going. And I haven't changed any of it. So if anything, we're like on our way to those big targets. The 2-3 year targets, we're probably almost halfway there. Let's look for the next jump on point. All right, guys, I'll be back in the Discord a little later and get some lunch. I'll post this recording as soon as I can, and I will be back in full tomorrow. All right, you got it. Thanks. Go get them.